The regulation of Bitcoin varies significantly from country to country, with some embracing Bitcoin as legitimate assets or currencies, while others have imposed strict regulations or outright bans. Here's an overview of how different countries regulate Bitcoin. 1. United States. In the United States, Bitcoin is regulated primarily by several federal agencies, including the Securities and Exchange Commission, SEC, the Commodity Futures Trading Commission, CFTC, the Financial Crimes Enforcement Network, FinCEN, and the Internal Revenue Service, IRS. Regulations cover areas such as securities laws, commodities trading, anti-money laundering, AML, and Know Your Customer, KYC requirements, taxation and consumer protection. Individual states may also have their own regulations governing cryptocurrency businesses and exchanges. 2. European Union. In the European Union, EU, Bitcoin regulation varies among member states, with some countries implementing comprehensive regulatory frameworks and others adopting a more hands-off approach. The EU's fifth Anti-Money Laundering Directive, 5 AMLD, requires Bitcoin exchanges and wallet providers to comply with AML and KYC regulations and register with relevant authorities. The European Central Bank, ECB, has also issued warnings about the risks associated with Bitcoin and called for consistent regulation across member states. 3. United Kingdom. In the United Kingdom, UK, Bitcoin is regulated by the Financial Conduct Authority, FCA, which oversees Bitcoin exchanges and certain crypto-related activities under the money laundering regulations. The FCA has issued guidance on the classification of cryptocurrencies, regulatory requirements for Bitcoin businesses, and consumer warnings about the risks of investing in Bitcoin. 4. China. China has taken a strict approach to Bitcoin regulation, banning initial coin offerings, ICOs, cryptocurrency exchanges, and mining activities in recent years. The People's Bank of China, PBOC, has issued warnings about the risks associated with Bitcoin and emphasized the need for financial stability and investor protection. 5. Japan. Japan has adopted a more progressive approach to Bitcoin regulation, recognizing it as a legal form of payment and implementing licensing requirements for Bitcoin exchanges under the Payment Services Act. The Financial Services Agency, FSA, oversees Bitcoin regulation in Japan, including AML and KYC requirements, cybersecurity standards, and consumer protection measures. 6. South Korea. South Korea has implemented regulations to address concerns about Bitcoin speculation, fraud, and market manipulation. Bitcoin exchanges are required to comply with AML and KYC regulations, obtain licenses from the Financial Services Commission, FSC, and implement cybersecurity measures. The government has also imposed restrictions on ICOs and anonymous trading accounts. 7. India. India has taken a cautious approach to Bitcoin regulation, with the Reserve Bank of India, RBI, banning banks from providing services to Bitcoin businesses in 2018. However, the Supreme Court of India overturned the ban in 2020, allowing cryptocurrency exchanges to operate in the country. The government is considering legislation to regulate Bitcoin and protect investors. Overall, the regulation of Bitcoin is complex and varies widely depending on the legal and regulatory framework of each country. Traders, investors, developers, and businesses involved in Bitcoin transactions should be aware of the regulatory requirements in their jurisdiction and seek legal advice to ensure compliance with applicable laws and regulations.